I did, man. I tell you something. It doesn't get old for me. Wednesday, the 9th of November, the day after Election Day. It's also the day after the Rangers lost to the frickin' Islanders at home last night. Dan Nathan was at the game, which is
pretty.
Maybe, I don't want to say causality. I'm just throwing it out there. I'm Guy Adami. Clearly, that is Dan Nathan. And check this out. In just a few minutes, 9 to be exact, Tony Battista of tastytrade will be with us. Today's episode is brought to you by FactSet, financial data and analytics that are powered by tomorrow. tastytrade, empowering the individual investor through content, technology, and know-how. This day after the election, a lot of different things happen overnight, still happening as we speak today. But more importantly, for what our viewers are tuned in for, is what's going on in the market as we sit here. Dan, how are you?
I'm doing well, Guy. And again, I do feel for your Rangers. And I know
No,
that you think this was a Johnson move. I was there with Carter Braxtonworth of Market Call fame, but kind of from, worth charting fame, when you say so. And he and I were with another buddy. It was 3-1. It was the end of the second. We're like, let's go across the street. They got this thing. Let's go hit a bar or two. By the time we get to the bar, it's 3-2. By the time we get our first drink, it was 3-3. By the time we walked out of that bar, the Rangers had blown that beautiful lead at the end of 2, and they lost 4-3. So, yeah, maybe it was a bit of causality here, Guy. I am sorry for your Rangers. It was a fun environment for 2 periods. All right, let's do this thing because, I think a lot of market participants got, I don't know, a little, what do you want to call it, geeked up or so, the idea of a divided government, right? So obviously it looked like the Dems were going to lose the House. The Senate was still up for grabs. A lot of people were enthused about that. We saw a lot of data in the lead up to the election. Well, here we are, Guy. The Dems, lose the House, very narrow loss. And it looks like there's a good shot that they hold the Senate and maybe even pick up a seat. We won't know for a few weeks. But the thing that's getting hit right out of the gate was high valuation tech stocks, mega cap tech stocks, energy stocks. These were all things that maybe people thought was on their radar that might do well in a divided government. What's your take on this? Because when I look at the things, you look at this, FactSet has it down by sectors. It's very defensive stuff that's working today.
Yeah, look, it's very hard to game this stuff out, what the market was hoping for. But I think it's clear that the market was anticipating, and then I guess hoping for some sort of Republican tsunami, to quote Ted Cruz. Well, that obviously has not happened. And to your point, in the Senate, it looks as though, it's going to happen in Georgia. I mean, it feels like there's going to have to be a runoff by state law. You have to have more than 50% of the vote. Doesn't appear as either one of those candidates will. So that'll last until at least the middle of December, I would imagine. December 6th will be the runoff. And I'm not sure what's happening in Nevada right now. So, look, the Senate is up for grabs, I guess. The House, probably about as close as you can get. So it's not that tsunami that I think market participants were hoping for. And maybe it's taking some of the wind out of the market sales. It's also, by the way, the market has rallied pretty significantly, as we've talked about a number of times since October 14th or so. So it makes sense to a certain point. Look, I was one of the people that thought we'd get to 4,000 in the S&P. We got to 39.25 thereabouts. And now the question is, was that it? Was that enough? Was that, decent but uninspired rally enough? And are we about to make the next leg lower? So that's what I'm struggling with right now. But I will tell you, I'm starting to lean towards that next leg lower might be a lot quicker than I thought originally.
Yeah, so that whole notion that, kind of markets over history have liked divided government because gridlock doesn't, it kind of maybe feels like stability, if you will, as it thinks, think about market participants and what they look for. And I think to your point, Guy, December 6th, and maybe they're not done counting for another week in Georgia, that lack of visibility about that hopeful, stability that was going to come after this election doesn't exist. And so, again, now we have to turn our sights to some of the things that were easily on the ballot, and inflation was one of them. And we know a lot of voters were very concerned about that. A lot of investors remain concerned about it. We have the CPI print tomorrow morning, and I guess the point here is that is there anything that happened in the last 24 hours that causes any political pressure for the Fed to do anything different than what they said they were going to continue to do in battling inflation last week? And your point about the S&P, Guy, if you look at this rally that we've had from mid-October, we just had that downdraft last week. I'd tell you that 39.25 or 30, if we can't get by there soon, it's not looking pretty good for like the continuation of this rally. I know that sounds kind of obvious here, but I guess my point is I almost want to point to the Nasdaq 100 why it's not looking good, because look at how far away from the recent lows the Nasdaq 100 is, and it really feels like we're a couple trading days away from taking out those October lows, and the S&P would most certainly follow behind it, because we did see a rotation out of mega cap tech into other areas of the market. And I just feel like the lack of certainty and a continued hawkish Fed, if we do continue to have really hot inflation data, means lower lows for equities.
Yeah, I think that's exactly right. And now you're starting to see, I mean, other than that, whatever rally we saw in Apple post earnings, that 2-day rally, which we could probably explain and try to do. But remember, the stock went from 138 in the after hours after they reported. I think it traded as high as 158 a few trading sessions later. Now, here we are round tripping that entire thing and actually lower. So Apple's obviously, we've said it a number of times, they're not going to be impervious to what's going on, and they're falling victim to it to some degree. And then Tesla trading again at levels we haven't seen in many years, quite frankly. So obviously all weighing on the Nasdaq, and I think you're exactly right. The Nasdaq is completely underperforming, and it doesn't look particularly good. So, here we are. It's fascinating to me, though, that there's still people that somehow have and I'll use the word misguided hope that the Fed's going to come to the rescue. In the form of the equity market, they ain't coming to the rescue. Credit market's a different story. We haven't seen the cracks there. But equity market, it ain't happening, people.
Well, I guess the playbook there, Guy, is that, if where's the Fed put come in play in the S&P 500? And I guess and that's a long ways away, right? So when you think about where we are here, the S&P at 3790 or so, we're not getting there anytime soon. But if you think back to, late 2018, when the S&P sold off in 2 months about 20%, the Fed definitely changed their tune. So again, a precipitous drop in equities might do that. But here's the one thing that, we've been talking about, the 10-year yield and just the ability for it to kind of maintain this uptrend that's been in since, early August, when it was about 2.7 or something like that. Well, here we are, we're at 4.1. We've come off a little bit. I feel like, this would be a good thing for any bulls and bears if we saw 10-year yield come in a little bit. Guy, thoughts here on this one? Because, we talked about the dollar yesterday, the Dixie, the US dollar index, it's contending with its uptrend. It really feels like it wants to weaken. And I feel like these things might trade together here.
Yeah, TLT, not the reversal, but this late sell-off, or this sell-off we're seeing over the last half hour or so in the TLT is not particularly inspiring. So a sell-off in TLT, I know you know this, and our viewers and listeners know this, but obviously lower TLT means higher yields, and I'm really surprised. Now, maybe we mentioned causality before with you in a hockey game. Maybe this is causality here with TLT selling off. Maybe that's why the broader market is selling off. Now, one of the things that I've said incorrectly for a while, and I'm surprised that I thought if the market were to sell off in a meaningful way, you would see a flight to quality in the form of bonds, meaning that yields would go down and the TLT would go up. It's not happening. And Danny Moses has made this point, and Carter Worth has made this point. He has two scenarios. Yields go lower, maybe short-term bullish equities, but not long-term. And yields go higher is clearly not bullish for equities, because yields aren't going higher because the economy is getting better. So it really surprises me how poorly the bond market is trading in this environment. But quite frankly, maybe it shouldn't. I mean, maybe that's what's really driving this entire thing.
I'll tell you this, though, Guy, I'm pretty convicted that this is going to reverse. I think the TLT is a buy here. I've been playing it long, the GOVT. I've been playing it through calls. I'm going to buy this TLT also. I think there's going to be a really great trade on the long side. I think yields are going to come in by the end of the year, and I think that might be the peak for this whole period too. So that's the trade. We'll keep updating that. All right, lastly, though, before we get to Tony, we got to look at crude, because I do think that the knee-jerk reaction in crude oil was lower after this uncertain result here. Thoughts there? Because I know that you thought that if it really came out as a clean win for the Republicans in the midterms, that you would see oil higher here. But again, I mean, to your point, it wasn't particularly clean. We have a bit of uncertainty for the next few weeks. In general, crude from a technical standpoint, this uptrend that's been in place for, a little more than a month, it's being tested right now.
It's definitely being tested. And, One of the things that my premise was, obviously into the election, crude oil had a giant bullseye on its back. Everybody talking about inflation, crude prices, gasoline prices too high, blah, blah, blah. And people were running on that. Well, now's the day after the election. People don't have to run anymore for another 2 years. So they're going to forget. I mean, as quickly as they brought it up, they forget about it. And I thought that would free crude to go higher, the next leg higher. And by the way, I still think that could happen. So we'll see. But to your point, we're right up against that trend line. And you mentioned, you talk about XLE and OIH. I mean, trading at levels we probably last saw in June. The right thing to do, the disciplined thing to do, is probably take some money off the table, unless you still believe, as I do, that there's this next leg higher. But, it's funny because you mention this all the time. If the global economy is slowing down, to use the word impervious again, crude is not going to be impervious to that. So there's so many different cross currents here, which is why trading is so much fun.
It is fun, Guy. I'm glad you put it in that context
here. You have to have fun. Who's a lot of fun? And I'm doing this. We're 30 seconds late.
Yeah.
Can I bring him in?
Of course.
Tony Battista question. I guarantee you didn't expect this question. So you get ready for it and don't screw it up, okay?
I'm going to do my best.
Who is a bigger badass, John Dutton or Beth Dutton?
Beth Dutton, no doubt.
Yeah, it's the right freaking answer, man. You are so.
I can't wait for season 5. I think they just announced it, or they're starting to tease it online. I can't wait. I think it's great. I think everybody wants a Beth Dutton in their life.
Oh, can I tell you, Yellowstone? And listen, you're talking about somebody who loved this frickin' Sopranos. I thought Homeland was the best written TV show in the history of mankind, but Yellowstone is ridiculous. And Beth Dutton
100% agree.
I tell you what, you don't want to F with Beth Dutton. With that said, Tony, we're talking about a lot of things. I mean,
do me a favor. Can you ask Tom Sosnoff that question the next time he's on your show? Because he's going to have no idea what either one is.
He has no idea, right?
Right. None. He's a
That's
one-trick
why I wouldn't
pony.
ask him the question. Well, talk to us quickly. I mean, I think we have some time. People want to sort of know how you and Tom got together, sort of the genesis of this entire thing, this great community you've built at Tasty Trade.
Thanks. We both met on the floor of the exchange, the CBOE. I started in 1983. I made my first trade when I was around 21 years old, and Tom had already been in the pit for a couple of months, and we kind of hit it off. We both played softball together. We actually really became better friends on the softball field than we did at the CBOE. He stood on one side of the pit, I stood on the other, so we really didn't talk that much during the day. But we socialized, and my son, who works with us here at Tasty Trade, is 32 years old, and Tom was at his first birthday. So we've known each other for a long time.
Tony, I've known you for a bit, and I used to go on when you guys started Tasty Trade over 10 years ago. It's pretty amazing. I went on one of your kind of early shows, and it's just, Guy used the term community. What you guys have been able to build, and really through education, and listen, you guys end up entertaining a little bit too there. Talk to us a little bit about, are there any differences? Our listeners, our viewers, I've gotten to know Tom's style over the last 3 months. What's different about your style when you think about markets than Tom's?
I don't fall in love with a lot of things like Tom does. Tom has, and maybe that's why his name's on the door, right? One investor's floor is another investor's ceiling. And sometimes, I know this Sam Bankman-Fried is getting a lot of, slack right now for going all in on everything. But that's how game changers do it. And I think Tom's when he gets conviction, he's all in. Me, I'm too stupid to be all in. I realize that I don't know where something's going or what something's doing. I try not to fall in love with things in the market. I stay a lot more mechanical and try to just let the numbers beat me or the market beat me.
I'm glad you said that, because when I get an opportunity to speak to people, one of the things I hear inevitably is this is years ago, but General Electric has been so good to me. Apple has been so good to me. First of all, these companies don't give a shit about you, number one, and people fall in love with these companies. There should be no emotion attached to them. So I'm glad you brought that up. They're just vehicles to buy and sell and hopefully make money with. So I think oftentimes we let emotion get in the way of things, and we get carried away with this revisionist history or this romanticized view of a lot of these companies that don't know you exist. So I appreciate you bringing it up, but let's talk at sort of 30,000 feet in terms of what you're seeing obviously, look, October 13th, 14th, we mentioned that Thursday, Friday, subsequently that Monday, that proved to be another short-term bottom. The market's bounced, but here we are, pretty messy day. What do you look at the landscape, and what is all this sort of telling you?
Well, you guys mentioned a little bit earlier on the show, they really kind of the high flyers. First of all, there's no more meme stock, right? There's no more AMCs, there's no more Bed Bath and Beyonds, there's no more like kind of that euphoria where people go in the market and everything was going towards tech. And now tech's taking it on the chin. And even you mentioned like some defensive stocks. I mean, you got Disney down, what, $10 or $12 today, almost $13 now, basically taking a lot of stuff significantly lower. And I don't know if it's completely warranted at this point. Now, you were talking about what you thought the market was going to do. I think we're going to have the opposite of what we had in 2021. In 2021, we ended the year, as you all know, near or at the highs, and then sold off into January. I think we have a little two-sided action here. We probably test the lows. They're just so close, and with implied volatility being almost 27% now, it's definitely showing you that, or at least pointing in the direction that there's going to be some two-sided action, and maybe some of it's going to be a little bit lower. But I think after these midterms are all settled, I think come January, I think you see a decent market. That's my longer term opinion, which means really absolutely nothing.
It's actually important. You know, yesterday we had the VIX up, and Guy and I don't throw the VIX up too often, but if you just look at the channel that's being developed here in 2022, you know, equities seem like a good sale when the VIX is in the mid 30s, and they seem like a good buy. You know what I mean? Like, you know, sure. the opposite way, you know, down towards 20. So, you know, to me, like, you know, you have these sorts of ranges here where, you know, you can use instruments like this to give you a good sense of kind of at least where sentiment is. And I think one of the things that a lot of investors, you know, as the market, you know, has been kind of ticking lower on certain phases, people are like, why hasn't the VIX exploded to the upside? And that means that a lot of people are hedged up. So to your point about like a Disney, you're having some one-off sort of situations where all the mega cap tech names are down more than 10% since they reported. Now most of them are down 30, 40%. These might be generational opportunities to start legging into a stock like Disney. And I'm going to start, you know, Disney at 85. I walked in after Guy and I talked about it last night on Fast Money for about 20 minutes. I'm like, I'm going to buy that stock at about 85 or so and average down, because I'm never going to be able to pick the bottom. And I have to have a bit of a fundamental thesis. So are you starting to see individual stocks that are starting to look attractive that you want to kind of leg into and buy in pieces and average into?
Yeah, and I think the one tell the CBOE came out with last week, I believe it was, that SPX volume and index volume has been some of the highest it's been ever in recorded history for trading, and that just tells me that a lot of the what would you call it, the trend type trader, or the person that's looking for the movement of the market is going into those sectors, meaning a big sector instead of individual stocks. And when they leave those individual stocks, they seem to get a little bit soft. And I think that becomes, like you said generational. I'll say they look like they become a good trade for at least for a short period of time.
You know, crypto, I've said it since the inception, and I read Brian Kelly's book in 2014, but, you know, I do my best. I don't understand it, and I'm not going to try to play where's Bitcoin or Ethereum or any of those coins going. But what I will say is I think they're clearly impactful in terms of what it means for market sentiment. You look at obviously what's going on over the last 48 hours, and I think to a certain extent, the broader equity market, it's taken some of its medicine on the back of that. But how do you look at this whole situation? Does it mean anything, or am I reading too much into it, Tony?
You know what? I'm in the same spot with you. I am not the expert in the room when it comes to Bitcoin or cryptocurrencies or anything like that. I have made fun of crypto, saying that, you know, for the last 6 or 8 months, it's basically the most stable currency you could have in the world, with the dollar going extremely higher and every other currency going, you know, to all-time lows. The yen, the British pound, the euro. Now they've all caught a little bit of a bid lately, but the euro under par. I mean, who would have thought? You know, the pound under 112 at one time. You know, who would have thought cryptocurrency was going basically sideways, hanging out? And by cryptocurrency, I mean Bitcoin. I'm not talking about any of those altcoins. To me, that's like talking about, AMC and Bed Bath and Beyond and the other kind of fringe players in the crypto market. So Bitcoin going absolutely sideways and very low implied volatility. Now you see it, falling out of bed here because of everything that we've seen going on here. But I don't think crypto's the play here. I think some of the stocks like Riot, which has been hammered, Hood today, the stock came out with great earnings. You guys are more fundamental guys than me, but from everything I read, everybody said it looked good. It would trade up to $12. It's down over 30% now in the last 48 hours after good earnings. It gives you food for thought. You know what I mean? So for me, I'm starting to look at those stocks for some small time play.
Yeah, well, here's another point. You talk about, you said this, and I think you said it really well. I mean, like, the AMCs, the GameStops, the meme stocks, they're done. Okay, all these SPACs are done. All these shit coins are done. So you've taken a lot of excess out of the market here. And to your point about what you see and how you see the stock market trading into year end and the sort of market we might have next year, here's the last piece of the puzzle. And we've been saying this on Market Call all year, and it's Tesla, the original meme coin, the original cult leader of a stock market movement, that sort of thing. And it is falling out of bed right now. It's trading near $180. And so when you think about this thing down about 55% from its all-time highs last year, you think about all the unusually positive sentiment around Elon Musk. And Elon Musk is melting down, in my opinion, on Twitter every day, a company that he overpaid by $25 billion at least. And he's disregarding the company that was once worth over $1 trillion a year ago, that he is the CEO of, the largest shareholder of, and can't stop selling the stock. Overnight, it meant the Wall Street Journal reported that he sold $4 billion in stock to pay for the crappy company that he bought, that he's melting down on. Talk to me about Tesla, and do you think I'm wrong about this as being kind of like the last battle fought for this market?
Yeah, I'd love to disagree with you so we can have some back and forth talk here. But I have to agree with you. I think Tesla and Elon Musk in particular is actually shitting on the people that kind of brought him to the promised land, by selling stock really on the QT. Like he went out and said, I don't have to sell any stock, and then he sells stock. It just seems kind of crappy to the people who brought you to the dance. I agree with you on the Twitter point. I think you're being generous with the number. I think he overpaid by even more. Will it end up being a good trade for him eventually? Probably. I mean, I don't have a lot of confidence in it, but I wouldn't want to bet against him. He is a genius, but he's not a marketing guy, right? I mean, he's a creator, right? And I think if he goes back to creating and changing the world that way, it'll be a lot better than trying to be a marketer or anything else like that, social media maven or Insta model or anything like that.
Let's put up a Robinhood chart again, because last week we had, obviously Tom came on. He talked about Robinhood. He loved Robinhood, the setup in terms of a company that, despite the fact that they're a competitor with you guys and gals, he thought in the environment of rising interest rates environment, unless they completely tripped over themselves, this is a stock that can go significantly higher. And he was on to something, obviously, until today. But let me ask you if this makes sense. And I can't speak intelligently about implied vol and Robinhood, although I would think it's probably extended today. And I know the way you guys think. Would you look at this and say, here's an opportunity to sell $8 mid-December puts, earn the premium, because that's the way you trade? Or is there more leverage at this point in just buying the stock and hoping for a double here? You're looking at that today clearly as an opportunity. I'm just curious as how you would exhibit that.
I bought the stock today. What Tom didn't tell you about was the 3-day rule. When Tom mentions something, you have to wait 3 days because he's always early. And we talk about it all the time on our show. He's always early. Ultimately, he's right, more times than not. I nibbled on the stock. The stock is actually $8.65 now. My average cost is around $8.80 or so. So I'm down a couple of dollars on my quick little trade here. I think you can't sell the puts here on a $9 stock. I'm being optimistic. It's $8.60, but on a $9 stock to sell the puts for 50 cents, I'd much rather cut your size down in half, or even cut your size down by 2/3 and just outright buy the stock. I mean, I think it's a 50-50 shot. You're either going to make $2 or lose $2 and decide what you want to do with it from there. I mean, to me, it's a pure stock play.
All right, Bats. Well, while we got you on the options, let's pull
Sure.
up Meta. Okay, so here's one that we know that it had that 1 day gap lower a couple weeks ago, and here's a 1 year chart here. Okay, I bought this stock. My average is about $95 here, and again, I thought after earnings that they were going to have to basically do what they've done is make some sort of announcement about cutting costs. And again, on the call, Mark Zuckerberg kind of doubled down on at least what they had planned to do as far as their pivot towards the metaverse spending. But I'll tell you one thing, lose tens of billions of dollars in one fell swoop on stuff that you say in your conference call, that's enough to kind of change your mind about what you need to do to kind of get investors convinced that you might start cutting costs in other areas. So, the stock is trying to fill in that gap a little bit. Is this the sort of name that you might look to if you bought it well, okay, let's say over the last week or so? Is this the name that you might look to sell calls against if you're long? And so again, overwrite it, take in a little premium, and kind of stay in the game a little bit.
Yeah, this is a $103 stock today. I think you got bailed out by him talking about and cutting jobs. I mean, I think we're going back to the old type trading where, when you cut jobs, the stock goes higher. Where when we were rallying, if you cut jobs, that was perceived as, bad. You weren't going to have those kind of movements. So I think you got bailed out here on this stock. For me, I don't have a position in Meta. I haven't been long. I haven't been short it. Haven't made any money on it. I don't understand it. I don't understand him. I think he's pulling a little bit of a mini Elon Musk himself. I mean, would I rather be long it than short it? Yes, but I don't have too much position. I think it's a premium selling on both sides, like calls and puts. I think a strangle in there is key. I don't think it goes anywhere, any place fast.
Well, so here and here's my point. So again, I bought it at 95. It's trading at 103. If I look at December,
it's a great buy.
So if I looked at, I'm going to journal it over to you, buddy. But the stock now is 103. So if I looked at December expiration, okay, the 110 calls, okay, so they're $7 out of the money. I could sell those, okay, at maybe $3.70.
Yeah. It's a great, great trade.
So that's how I'm thinking about it.
Oh, totally agree. Monthly implied volatility is 54, which for those who know about what volatility is, that's about $11 expected move in the next 37 days. And you're picking up just about $4. Let's just round up and say $4. You're picking up 35% of the move and you're bullish on the stock and you already have it $7 or $8 lower than where it's trading. It almost makes it like you take all your downside risk, not your upside risk. Take all your downside risk out of the play because you're collecting that extra $4 trying to keep. You'll have that whole move. You'll basically be even if the stock goes down to 97, 98. Your cost basis is 95.
Tony, I want to ask you a quick question. We talked to Tom a lot about energy markets and stuff, crude oil. I have a differing view. Dan's been, right in the underlying commodity. The stocks have told a different story. So there's a lot of cross currents there. What is your sort of macro view or maybe granular view in terms of the energy market?
So I'm glad you mentioned it because I know you mentioned it before I came on the show, and I was hoping you would get back to oil. For the first time, you just mentioned we had kind of a divergence between the equity oil stocks, like the XOMs, the ConocoPhillips of the world, and the physical itself. For the first time today, you've really got some of those XOM, XOP down significantly, $3, $4, $5 a piece in some of these stocks. XOP down significantly with oil itself going down. So I think these kind of equity stocks have overshot themselves. I don't know about oil itself. I'm a little bit more bearish than I am bullish on oil. I think it's a great volatility play. Crude oil volatility has exploded over the last couple of days. So I think there's some good premium selling there. But the stocks themselves, even though I'm mildly bullish on the market, the stocks themselves way oversold. I'd rather be short the individual stocks than be short the physical.
Yeah. So yesterday on Market Call, Tony, I detailed, again, I had a similar view about the stocks relative to the performance of the underlying commodity. I looked at the XLE. We know that Chevron and Exxon make up about 40% of that. Again, literally to the penny, to the high from earlier this year, the XLE stalled. I mean, again, it could have busted through there, but it stopped to the penny. I put on a put spread. Okay. I was looking out to the end of December. I did the December 30th kind of year-end expiration, and I bought the 90-75 put spread. I paid $3 for a $15 wide that breaks even down about 4.5% from where it's trading at. What do you think of long premium directional trades like that and something that you agree with on the direction? Are you ever inclined to play it the way I did, or are you looking at it from more of a vol standpoint?
Yeah, I get the value in a debit spread. I'm just not that good with direction, so I
Yeah.
need a little bit of a cushion to make money. I need time because I said Tom has a 3-day rule. I might have a 5-day rule. You know what I mean? Like I'm not right immediately either. So for me, I would probably have rather like to sell a closer at the money call spread than buy the at the money put spread. But I get it, man. Defined risk. You're putting $3 on. You feel like you're going to hold this forever. I never get to hold them forever because I usually take my profits a little bit too soon. But if you have conviction in a price point and you can do that, a vertical spread debit is a great way of doing it.
So quick one here, and I've been doing these sorts of trades for a long time, and I have to have, you said this to start out our conversation, you have a process, right? And so for me, what I do when I'm expressing a directional view, long premium, whether it be long calls or puts or spreads, that sort of thing, I usually use a 50% mental stop. So I paid $3 for that. So if it gets to about 1.5 because the underlying's not moving or it's going the opposite direction, I'll cut my losses. And then what I also do is if I paid 3 and I get the movement to the downside quickly, I'll either look to take half the position off, all of it off, and maybe roll or something like that if I'm still convicted. So that's kind of how I think about it. And I totally get it. You grew up in a world where you want to be selling options for the most part, not buying them.
Yeah, but I like what you're doing there because I'm sorry to interrupt you. If you're doing a spread as opposed to just a naked long option, that process, you're actually, whether you realize it or not, you're giving yourself time to be right. Because that spread is going to move significantly slower than the naked option will for you and against you. And I think most times we're a little bit earlier. We don't get it right, and we need a little bit of time to be right. And when you have a vertical spread, you give yourself time to be right. When you're just naked long an option, if it's a 40 delta option, it's going to, if stock moves $1, it's going to move 40%. That's just math.
One of my first days at J. Aaron, one of the things, and indulge me for a second, one of the things that was sort of indoctrinated in us was take a partner. And they weren't talking about a spouse or a friend. What they were saying was, if you have an idea for a trade, get somebody else's eyes on it. Have another set of eyes look at it. Because, you said earlier about falling in love with things. And, when you do a lot of work on a trade, for example, you're bullish in Robinhood here for all the different reasons. And what winds up happening is it's human nature. If you're so hell bent on being bullish, a lot of times we'll look past, whether we realize it or not, some of the things that can go wrong. But if you bring somebody in from the outside that hasn't looked at Robinhood in 6 months, they might take a glance and say, hey, wait, Tony, that Schwab reports here or Robinhood has this investor conference. And in a world now where everybody's sort of, in their basements by themselves doing things, they've made what is a very difficult game in terms of trading that much more difficult because of its insular, very solo environment that we find ourselves in. You did something though, a tasty trade. And we talk to Tom about this all the time, the power of the community and how being part of that community can only enhance your trading. Can you speak to that?
Yeah, it's not only that, it's eyes that they actually bring to me sometimes. Like I'll get emails from people saying, they'll say, hey, have you seen Tesla? Well, Tesla I'm going to look at all the time, but they'll bring up some other stock. Upstart has earnings. I wasn't paying attention to. It's not something that I always look at. Oh, maybe there's an opportunity here. Or they'll say, why does this stock have volatility of 150 in the front month and only 75 in the back month? Stock I wasn't looking at, and they bring it to my attention. And we used to have, I shared my office with JJ Keenahan for a while and Tom Sosnoff, and we would sit around and, some people are looking at one thing, and another person looking at something else. And it's just opportunity because it's all just numbers. If it's tight and liquid markets, it's all just numbers. And then you apply a strategy to it, but you need movement, right? At least that's what I want.
That office sounds like a lot of fun. Did you guys have a keg in that office there? Because I heard Kinahan's name and or maybe it was just a happy hour thing.
He was respectful during business hours. He was respectful.
Fair enough. Of course he was.
No keg. We were all young guys. We were trying to. I started with $5,000 in my account when I traded on the CBOE, so I had to make money every day. If I didn't make money my first week, I wouldn't have had a 40-year career. So. It was business. I didn't leave the floor to to go to the bathroom, nevertheless have a beer. So no, it was all business.
Tony, stick around for a second. We're going to take a
Sure.
quick question on Roblox, and if we can pull up an
Sure.
RBLX chart. A lot of people asking. Obviously, it's disaster du jour here. You know, this stock basically has a market cap still, despite this move. Dan, you know this better than I. It's probably close to $18 billion, a little less now. Trading probably close to 6 times revenue. I mean, just an expensive stock, despite the fact that it's still been getting beaten up. It's bounced off those lows we saw a couple months ago, but it feels to me like it wants to make that test that 52-week low. Dan, just sort of knee-jerk reaction to Roblox.
So really, Guy, all of the above. I mean, nearly a $20 billion market cap. And I guess the issue here, you know, at 7 times sales, we can talk about sales and multiples of sales. I mean, if you don't have an E in this market, if you are, you know, and that sales number is decelerating, and just there's kind of, you know, fundamental headwinds to the business. And this, I mean, this is what we're seeing all over the place here. That lack of earnings is going to be the thing that you're going to make new lows. And I said this on Market Call the other day, and it was one of the reasons why I sold Snap yesterday. Is like, I want to buy stocks right now that I think are down 30, 40, 50%, where they have defensible earnings, where they have moats, that sort of thing. That's the only way that if I'm going to be early, like Tom and Bats here, you know what I mean, that I can feel a bit more comfortable about it. Roblox, you know, we had this segment guy on Fast Money the other night. I think it was like buyers, I don't know what the hell it was, some stupid game. But I was like, listen, I'd probably be buying it on a gap. And you say this all the time, a gap lower, okay? But like sometimes when they get that gap lower, 18%, and now it's testing those lows, it doesn't look so attractive anymore. So thoughts on that, Bats? Because again, it's like, how do you buy this thing holding support at its lows? I don't know. There's no earnings there. So what are we hoping for?
Yeah. Wow. When stocks for earnings, at least from our research that we've looked at, when they gap down like this, they stay down for a little while. Now the low might be in, like it's not going much lower than this. It's going to hang around here. Maybe it's buy it if it goes even lower kind of thing. If you can dollar cost average in or something like that. But if you're buying it for that big pop higher, typically they don't go higher. Now stocks that gap up can typically go a little bit higher, and you can ride that wave to the upside. When they gap down, it's kind of hard to pick up a falling knife, well, at least for earnings. So for me here in Roblox, down 6,000 change, it probably has a little bit more room to go. Yeah. I think that's what you were saying also.
I think so. I mean, listen, this was a $21 stock, I think, on the lows in June 15th or so, if memory serves. I don't know if it gets back there, but it definitely somewhere between, I think, 25 and 29, this thing settles in, and we're not close yet. So I'd be avoiding this thing. And I know a lot of people love Roblox as sort of the metaverse play, or that's great. The problem with that is, as people learn Facebook, I mean, learn the hard way. I mean, the problem, and again, not to dogpile on Facebook, but the problems they had is they can't explain the metaverse to anybody, and the people they're trying to explain it to don't understand it in the first place. So, and that's, you know, Roblox on steroids. Anyway, Tony, thanks for joining us. This was fun. I'm glad you were able to jump in for Tom Sosnoff. It was clearly at like a Cubs, I don't know, winter party or some bullshit thing. What is he? Is he getting his hair washed today? What's he doing?
He was getting his beanie washed. He hasn't washed it all year this time.
All right, man. Well,
by the way, not a particularly great look, but hey, who am I, as I say, to cast aspersions? But that's it for Market Call. I want to thank our sponsors, FactSet. Want to thank, obviously, tastytrade. Check out the community at tastytrade. They've really built an incredible group. And if you're looking for a trading community, theirs is fantastic. Please subscribe to us, Risk Reversal Media, on YouTube. Like our videos, leave comments. We do enjoy hearing from you, good and or bad. If you want to talk Ranger hockey, I'm your Huckleberry, as Val Kilmer said. We'll see you tomorrow at 1 o'clock with Carter Braxton Worth of Worth Charting. See you later, folks.